hoping this is coming through loud and clear for all of you guys. I'm going to bring it up on my second screen over here. And if it's coming through loud and clear, guys, leave a comment. I've got a new mic that I'm playing with at the moment. So we've gone a little bit high tech here. So hopefully I'm coming through very, very clearly and softly. And I've got a new camera as well. So you guys are going to be able to see the greys and the wrinkles, hopefully by Sunday's video. Mad Cow, he has been one of our longest supporters. So great to see you here, Mad Cow. There's plenty to talk about tonight. A bit quiet, someone said, loud and clear. I'll put it right in front of my face. How's that? Is that better? Turn it up. Okay. What about when I talk loud and clear? No, still quiet. Bit quiet. Okie dokie. Let's head over to here. Let's click on advanced properties. Let's turn up our mic to 4 decibels. Close. Now that should be a lot better, I'm hoping. It looks like it's in the yellow zone. Loud and clear. Woohoo. Awesome. Thanks, guys. Testing live. How about that? See, I would not have been able to do any of that a couple of years ago. You learn a little bit of everything in this trade, don't you? Awesome. So we've got 300 watching already. Wow. It must be a bull market. We might bring up the charts while we wait as well. I'm just going to give everyone a minute to tune in. If we've got some time at the end, we are going to have a look at those questions for you guys. Get rid of this clutter. And at the moment, another big wick there just before, wasn't there? Geez, these markets are thinly traded. And we're going to talk about that, what we saw. Again, hopefully that is loud and clear now, that I've turned it up a bit. So we're going to talk about what we saw with a few wicks the other day and in the past when we had that big market crash back in March as well. So guys, if you can hit the like button, we've only got 48 likes and nearly 400 people watching, guys. So let's try and get that ratio up a little bit and help that YouTube algorithm find us. If you're having trouble with the ads, I've got a couple of solutions for you as well. I'll mention that at the start. So someone's talking about tabs, guys. This is nothing. You guys know on a Sunday night we have normally 50 tabs and 2 browsers worth. So about 100 tabs altogether to get all the news. Someone's saying I'm out of sync. Shouldn't be. The internet connection should be all right. Anyway, guys, okay, so it was nice to have this big move up the other day, and we are just consolidating a little bit. I hope that this does turn into like a little bit of a flag. I've got a lot of mess here and clutter, but that's basically what I'm getting at, as you guys know. TA, it's not a science. It is a bit of an art form, and it's the psychology that matters. That we've had a big move up, and now we're kind of tightening in a little bit. We're going to talk about the other move we had because we got that explosive volatility. So I'll give everyone just another 10 seconds or so. Try and give people 5 minutes at the start to tune in. And as always, we try and timestamp these so you can revisit them later on. And guys, feel free to share these videos with friends and family. And let's get into it. So thank you all for joining, all 400, 500 of you. Thanks to everyone that's hit that like button, up to nearly 200 already. One of the things I wanted to say at the start was about the ads. So yeah, those scam ads are going around. If you're using the Brave browser, which you all should be, it's free and it blocks all the ads. That's one way. Or you can start an incognito browser by pressing Control N. That'll open a new browser with incognito mode. Means that it's basically wiped all the the cookies and the metadata. So there's no history. So it doesn't know that you like crypto, so it can't show you crypto ads. So there are a few little tricks of the trade. So hopefully not too many crypto ads. I just want to start off again by saying a big thanks to everyone that's joined lately. So 300 members again this week. We're up to 2,612 as of tonight. You guys have been so well behaved, reading the rules, the welcome material. Last night, you guys got a cheeky little sneak peek at the new Nuggets News platform and app that we have started beta testing. And thank you to the few people who have. If you're in the group, there was a link in the comments of that video, but we've already had hundreds of people say they want to be a beta tester, and we're only really after a few people to start off with, and then gradually we'll start onboarding more and more. And there are a few hundred of you on the wait list that don't have Facebook or don't like Facebook that want to join as well. So that I believe that is on the website, or just hit up Nuggets News Twitter. But yeah, we know that there's a lot of you that are really keen for this app that we've been working on that's very, very polished and going to take us to the next level. So let's get into the things that I want to talk about. And it really is just the focus on gold and silver, Bitcoin and Ethereum, some DeFi stuff. And it's what I've been talking about lately. So look, these have been my general thesis that I've outlined, I guess, for everyone. I always try and give everyone an insight to what I'm thinking in the Sunday night videos. And if you watch all our videos and podcasts, you know what I'm thinking generally anyway. And with the members, you guys get my multiple daily updates. So you guys know that I've been taking profits on DeFi. I've been telling you to take little profits for weeks now, or even months on some of the projects, but really larger percentages. And I sort of made it clear that I think we're getting kind of bubbly now in specific projects, and there's others that haven't run yet. Increase exposure to Ethereum. A lot of you just thought it's because I've got, you've got heavy ETH bags, Nugget, or you're just shilling ETH and this, that, or the other. These ETH killers are better. But really, it was the fundamentals why I was so bullish on ETH, and ETH had an explosive move higher now. I thought gold was going all-time high. It was just a matter of time. Now, gold moving $100 in a week was a lot quicker than what any of us thought, and I think it's going to have a bit of a consolidation or pullback now, which we'll get to on the charts. Silver, the gold to silver ratio, silver to catch up, all those things are sort of playing out nicely as well. And over the weekend, I sort of predicted that I think Bitcoin is going to break to the upside. That volatility that's been compressing, I think we're going to print a $1,000 candle, and we got that. So look, well done to you guys that have been able to capitalize and profit off that. These aren't, calls. It's up to you to tie everything that I talk about with other education you do, other people you follow, and build your own thesis and invest. So I do hope you've all done really well from that, with everything going in our favor, because there's times when things aren't going to go in our favor as well. But big piece of news in the last 24 hours was another exchange traded product being listed on the Swiss exchange. So this is the third biggest exchange in Europe. We're talking stock market exchange, not crypto exchange, for those of you that are new. And this is a product that is going to be more actively managed. So a lot of big wealthy clients, they don't just want to dump their money in something that kind of tracks the price of Bitcoin. A lot of people want something that's, like a fund manager would with shares, a little bit more active, and it's got a range of large cap altcoins. Something that I'll keep hammering into you guys is that money is going to flow into the large cap coins. Another mistake beginners continue to make is joining my group. There's a post about a small cap coin, or an article or a news piece, and these people are commenting, oh, where do I buy it? And I keep saying to them, if you do not know how to find out where you can buy something, you should not be buying something. You're a beginner. You've got to keep learning how to even buy and store your own Bitcoin and Ethereum and the large cap safe coins first. Now, some people are never going to learn how to even store. So that's what these sort of products are for. And the more of these we get, the more safe the SEC are going to feel to approve a Bitcoin ETF. So the other big news was all the US banks being able to hold crypto. I think they're the sort of catalysts that gave us the big move up this week. And then we've got the competition that I spoke about in detail in Sunday night's video about the race between the crypto exchanges to become banks and the banks to become crypto exchanges, or digital asset exchanges, I should really say. The race to hold, I guess, everyone's crypto, non-fungible tokens. We've already got property that is on Ethereum. We've got government bonds. So it's just all these digital assets. And banks have got hopelessly old infrastructure. The SWIFT system, which takes days to send money anywhere. They've got no hope of storing digital assets on their current systems at all. So look, that's the race is on, I guess. Dark Helmet saying he's still down 48k Australian. I hope you get that back this cycle. You must have bought near the top, Dark Helmet. I'm not anyone that's been dollar cost averaging in and learning along the way should be doing well, but we've got a long way to go in the bull market. Anyway, I'll have a look at some questions at the end if we get time. So the number of currencies around the world are really struggling at the moment. So Turkish lira falling to a fresh low against the euro, even though they've defended it. So this was a great set of tweets, and Turkey are now selling their reserves, trying to defend the currency, but they're running low on exchange reserves. So when everyone is sort of selling your currency, well, you start trying to sell down, the US dollar reserves that you have, the Forex reserves, trying to defend the currency, because they've already got this currency that's kind of inflating and heading towards hyperinflation, but they're running out of reserves. And if you actually look at this, they're increasingly getting this gold exposure, or this is what central banks are going to look to do, I believe, because why wouldn't you buy Bitcoin? And this is what I've spoken about in interviews with the likes of Simon Dixon. Nobody wants to be first, but if this central bank is eyeing a currency collapse and the price of gold is going up and they can't actually get physical gold delivered because it's so scarce and it's taking so long, or they're sanctioned, why wouldn't a central bank say, what? Look at this Bitcoin thing. Let's just start printing money out of thin air to buy that. And that's when it gets really, really interesting, if that starts to happen. So I think these are the sort of reasons which are lingering in the background, and they're gonna unfold in one way or another. I think it's just a matter of time. And then you've got these sort of announcements. Now, I was having a little bit of a dad joke here. Binance and CZ caught shilling. The Uganda national currency is called the shilling. But the point is that these guys have got exchanges now in dozens, if not 100. I'd say there'd be crypto exchanges in more than 100 countries now. So you hear about these stories, Turkey and the lira, Venezuela, Zimbabwe, Argentina, but it's every country has a currency that's struggling, and now there's these on-ramps for all the people, and a lot of them have smartphones, or a lot of them know where their local Western Union is, or their Western Union has been converted to accept crypto. You can buy Bitcoin, or maybe you can buy some stable coins there as well. So if they can turn that into a profitable venture, they're probably going to charge you a spread on the Bitcoin. They're going to try and make money somewhere. But once those people have Bitcoin or crypto and it kind of starts circulating in these countries, the network effects could take off as well. Now, the backdrop to all of this, and the most important thing to understand, is still the US dollar as the world reserve currency. So the bond market is the biggest market in the world. We're talking, trillions and trillions of dollars, where governments issue these bonds. Investors think that they are the safest asset, because it's unlike a stock where a government can't really go broke. A government can always print their own money. So the only question really becomes, well, how valuable is the money that I'm going to get paid back in? I don't really want to buy Turkey's bonds at the moment, because they're likely going to print so much money and it's not going to be worth much even if I get paid back, if that makes sense. So that's why you've seen Argentina default on their bonds. They just issued a 100-year bond, and then it's already lost a lot of its value years later, because Argentina have always defaulted on their bonds, or the currency is so worthless. Thanks to NeoCharm, I've got a €50 donation. So any news on the Vietnamese dong or Iraqi dinar, thanks for your good work. We might have a look at those on the charts in just a second if you like. So thanks for that, NeoCharm. I haven't got a donation for 2 years, I don't think. That's awesome. All these currencies, a lot of people are saying, the US dollar is crashing and that is weak at the moment. But I still think that it's a fair argument why it's been weak short term. But at the end of the day, I wouldn't be buying bonds of any government currency because I don't want to get paid in that currency. I don't want to get paid back in that. Now, for a while, US bonds had a sort of 1%, maybe 3% yield on a 30-year bond. And that was pretty good when all of Europe had negative interest rates. But now rates are getting low on the American bonds as well. So people are saying, well, hold on. The US is talking about more of these trillion-dollar stimuluses. It's not to the point of, Zimbabwe or Venezuela. It's not complete trash, but they're really starting to print a lot of money. And I'm sort of looking at the debts and thinking, do I want to get paid back in that currency just to get a 0.5% yield over 10 years? At the moment, inflation is actually higher than that, like we spoke about. So the cost of goods is going up at 2 or 3%, but interest rates are low. So in real terms, why am I going to give the government my money if everything around me is going up 2 or 3%? Remember, that's the official rate. So actual inflation can be closer to 5, 6, 7, 8%. And that normally things like gold and maybe property, that's probably not a good example in this case because it's so stretched and people are over leveraged. And that's actually a really important point I want to tie into what I'm getting at here. Gold is one of the only assets, and Bitcoin, that isn't someone else's liability. So a bond, again, you're relying on someone else. A property, you might say it's a good store of value, but a property is only worth that much because everyone's got a debt. The average house price in Sydney isn't $1 million because everyone bought it for $1 million. It's $1 million of debt that people sort of borrow. Whereas gold, you can now say, well, I'm not going to give someone else my money for a bond that I might get paid back. I might get a tiny interest rate, and the money that I'm going to get might be worth a lot less. So you just throw all that out the window and just say, gold, sure, it doesn't offer anything, but it's not someone else's debt. I don't even have to worry about a business going broke and shares or corporate debt. That is a different conversation. Government debt's normally a bit safer, but now we're getting to the point where even government debt is not that safe. Thanks, JJMCD. I haven't looked at Cartier chain yet, DeFi aspect. I'm going to get to DeFi in just a sec, so share some general thoughts on that. But as long as it isn't Kim Kardashian's chain, we might have a look at that. So this was an article on Bloomberg that Pomp shared, and he's basically saying that this is a real article. The world is changing so fast. If you had have thought that this was going to be a headline 12 months ago, Goldman Sachs and all the big banks are warning about the dollar's role as the world reserve currency being at risk. And that's because things like the precious metals have rallied as real interest rates have declined. So just like I spoke about, inflation is now starting to go up, and central banks are actually welcoming inflation and saying, we actually want inflation to run pretty hot. We want the price of goods to go up, but bonds are low. So why is anyone going to give governments money when everything around them is going up in price? Now, we know all this debt that's probably not going to get paid, and it's sort of coming due. So if you think that the US government's expenses were maybe, say, 1.1 trillion on whatever it is each year, one part of their Medicare budget, and then the next year it's 1.2, then 1.3, but what they're collecting in tax isn't going up. So it's starting to become obvious. Now, for some people, it was obvious for years. Peter Schiff and Mike Maloney have been talking about this for over a decade. But most investors are so short-focused that they're only now realizing that, oh shit, the US have got to print so much money to pay this all back. And it's actually creeping up on them now where it's another trillion. Oh, it's another trillion next month, another trillion before the election. And so the US dollar is, a little bit shaky. Now, I've spoken about this in depth with the milkshake theory that Brent Johnson has, where he thinks that the dollar is still going to go up. Marin and I, we've got another video coming up this week, our commodities update, and I know plenty of you want me to ask him all about gold and silver and uranium again, what's been happening this month, which we will. His theory about the dollar swap lines. And now a lot of people are saying that, yes, the US dollar is going to go down because of all the reasons we outlined, but remember, these other countries, a lot of them still need the US dollar. And people have been saying, well, even if they have the swap lines, that's not going to push down their currencies. But remember, even if the Fed print $1 trillion to give to someone on the swap line, that other country still has to print that money to to put it up or to borrow it off them or to swap with them, if that makes sense. So every dollar the Fed prints is still sort of, it's one for one. That's not actually weakening the Fed's currency that much. So I'm still, I'm not convinced that the US dollar is as bad as everything is, that all these other countries are worse. And sure, the euro is having a bit of a bounce at the moment. This is the Dixie, the DXY, and you can see on the daily chart, if we go here, that it's been all downhill since back in March. So everyone rushed to the US dollar as that safe haven, which we spoke about at the time. We did those videos. But this is a basket made mainly up of the euro, and then you've got the British pound, the Chinese yuan, Japanese yen. So the dollar's been going down, but I do think that there's a chance that it can still bounce. I don't think it's just game over. I think Europe are going to have to do enormous stimulus. Australia, the Aussie dollar's been strong lately. And this is the point I want to tie together about currencies, and then we'll whip through everything else. So in this video back in April, when the markets were all crashing and people were asking us, how do we buy US dollars? And I said in this video that, hey guys, putting my trading hat on, I probably think that this would likely be a place that Aussie dollar is going to bounce, if not a sort of short-term bottom, because of the sentiment where everyone was panicking and wanting to get out of the Aussie dollar. And it happened to be the bottom, and the next few months we've gone up to over 70 again after it got down to 55. And I'm seeing similar sentiment now, where people like YouTubers that normally talk about crypto and people on Twitter, everyone's got an opinion on the dollar, and they're saying, death of the dollar. Now, it was the people that were talking about this a long time ago that have been proven right. So, now back here when it was $1.12, this was the Aussie dollar, but you guys are getting the point what I'm saying with the sentiment of everyone sort of jumping on it at the last minute. And when the herd all think that something's going to happen, it's probably likely that a lot of it's already priced in. So I don't think we're quite at that extreme yet, where everyone's calling for the death of the dollar, but I've started to see a lot of those headlines around. So I'm just being a little bit cautious. And just because that has been good for gold and Bitcoin, they're all priced in dollars. So when the dollar gets weaker, the price of gold and Bitcoin gets stronger. I definitely think that it's all a relative thing. And Bitcoin and gold can still go to far, far higher levels, because they're printing trillions of those dollars still. So that's just something that I'm being mindful of at the moment. Now, in terms of Australia, I just want to, this is a good example of somewhere that's in the middle. It's not quite a hyperinflating, developing nation, and it's not quite a world reserve currency like the US. It's in the middle. So starting to see these headlines about how property prices are going to get affected. We got news today that Australia ranks last in terms of manufacturing self-sufficiency out of all the developed nations. We're not good at making stuff, and that shouldn't be the case when we've got all the resources. So what that tells you is that we've got all these resources, we're good at digging them up and then giving them to other people who add the value, and that is just a terrible situation to be in. We've got to get better at that. They're starting to talk about, like, all these governments, well, how are we going to pay these bills? Tax reform, push that back onto the states. And I'm not, bashing one party or another. I don't think that either of them are that great, to be honest. I think we need a complete overhaul and start to get experts in their fields in positions of decision making or policy making. But this is what's going to happen, and they're not going to make any changes. They're going to do exactly the playbook that we've seen in all these other countries. Look to raise taxes on people heading into a recession or a depression. Just doesn't make sense what they're doing. And Alex Saunders has been really good at talking about modern monetary theory, because I think we need to consider things like that for the time being. But that's another story for another day. Talking about a baby boom, maybe that'll boost the economy maybe in 18 years time. But I just think that we're so reluctant to do anything radical or change that we know that Australia's going to go down that same path of printing money, trying to boost house prices, huge first homeowner grants. And so it's going to be really predictable to play the markets in that case. Steve Koukoulas, he bashes a lot of these theories and people trying to think outside the square. And this is typical of him just saying, investors are getting irrational, shiny bit of dirt. None of these issues are relevant, blah, blah, blah. And that takes me back to when gold bottomed. And I shared this on Sunday night when someone called it a pet rock. Again, that that sentiment when no one wants it, that's the time to buy it, because everyone has already sold it because no one wanted it. Now, when we look at this chart of all the gold performance in all the different currencies up to 2020, it is now green in basically every currency on the planet, and it's at all-time highs, more importantly, in every currency on the planet, which is very, very cool when you think about all that fiat money that's being printed. And I know it sucks when people think gold gets manipulated or whatever reason, but this week is so important. It's a milestone that gold actually did it. Gold broke out to new all-time highs in every currency. So those fiat currencies are losing value. It's not a straight line. It's choppy. Things happen, but we finally got there. And hopefully on the channel, we've been bullish for a long time, and you've taken advantage of that. Now, silver was the other one that we spoke about. We did those videos when it was flash crashing down to 13 about how I thought you could sort of take advantage of the difference between the ETF price and the price of real silver. That played out nicely as well. But it was that gold to silver ratio we're looking to come back in. But here I've got gold overlaid with Bitcoin. And this is the sort of chart pattern. Sorry, this is the gold price, overlaid on top of Bitcoin. So I think Bitcoin could very well play catch up or mirror what gold has done, and that would take us to over 20,000. I think that's definitely on the cards. And the same with Ethereum and silver. There's a little bit of a relationship here. They tend to be more volatile, upside, downside, move after the other. So all those things are very similar. So this would give us, if these two play out the same way, $450, $500 Ethereum. Again, I think that is very much on the cards in the short term. And longer term, who knows? Let's not go too many long-term predictions there. But the correlation between these two is starting to come off a little bit. So they've been really correlated, but I've always spoken about how I want all crypto assets to tread their own path like stocks. Now that's, again, it's gone out the window a little bit with stocks because of all the ETFs, but it's really great to see when, ETH can do its own thing, Bitcoin can do its own thing, Cardano can do its own thing. That's what I would love the sort of space to turn into, and then it rewards those that are doing the research as well. Now on Sunday night, this was a little bit scary actually. I sort of made this prediction and posted it in our group. Bitcoin is about to command attention, and I think that Bitcoin is about to pull off with gold. And that was in reference to how gold's had a huge move lately and actually gone up $100 in a week or 5%, which is huge for gold. That's almost like Bitcoin going up thousands of dollars in a day. So look, that prediction played out minutes later, which was pretty scary, but it didn't quite happen where it hit the circuit breakers. I was really wanting the Bitcoin market to break the futures markets where they have the circuit breakers where they have to shut down. And one day I'd love to see Bitcoin move so much that it moves outside the circuit breakers, so that even the next day when they reopen, price still can't move 20% again and catch up. And that's going to liquidate a lot of the Bitcoin traders, and they might even question it. The futures markets and the regulators might say, what, if Bitcoin's going to move more than 20%, we can't have these markets on Wall Street, which would be fantastic. Get rid of those futures, those paper products. Now, another tutorial we did last week was talking about the coming move in volatility. And this product here that I was talking about trading was the Q3 volatility contract, and that's jumped 50% since we did that video as well. So we saw that volatility expansion, and it's come to the upside, and it's probably going to continue. I don't think volatility is going to go back to where it was before. And this is just a visual representation of those circuit breakers. So we did open up, so we do have a gap to the downside. Now, some people think that all gaps have to get filled. I actually don't think that that's the case. And it wouldn't surprise me at all if this was the one that didn't get filled and left a lot of people sort of waiting for it to get filled. But this is 7%, 13%, and 20% from where the market had closed. And Bitcoin has to have a pause for 10 minutes and then another 10 minutes, and then it's closed for the day. And if that happens and Bitcoin was to keep going, that's the kind of dream scenario for me, to break Wall Street. Now that we've had this big move, the media cycle is going to pick up again. So, I got a phone call from Stockheed the other day, hoping that, news.com.au starts to reach out, and it's just sort of, next thing you know, it's on hack Triple J on the way home, and this is the cycle. And we've spoken about how it's probably not going to happen until we get over 10,000 or 15,000 in Australia. It's those big numbers, and that's why the herd kind of always get in late. But anyway, in terms of psychology, I just wanted to mention and go back and rewatch this video from the 17th of March where we did stream it live, 30,000 views. And I spoke about that, how I was buying Bitcoin and adding it particularly to my super fund. $4,000 Bitcoin, $5,000 the next day, just buying a little bit if it's still there each day, because when there's blood in the streets and people panicking, that's when you want to be a buyer. And once again, there was people even in my group saying, you know what, I've sold. This guy on Twitter says it's going to 2K or 1K. Hyperwave, see, it's going to play out. Everyone, it's always got a reason why it's going to go lower. And once everyone gets scared and bearish, look how quickly everything snapped back. And here we are, back up at 11K. In terms of DeFi, so this has been getting very bubbly. Now, there's good reason. We see how much money is locked. But again, this is starting to almost become a little bit Ponzi-like. And I hate to say that because obviously they're not thieves or criminals and they're not actual scams. But people are starting to build in token mechanics that almost just encourage people to lock up their funds. And it's not just lock up to get yield. It's lock up to get really risky smart contract risk and layers of risk upon risk. So it's not that simple, and I don't think anyone is really appreciating that at the moment. And I think we are going to see a big incident, whether it's a hack or a robbery, a bug. I think something's going to go wrong and really deflate a lot of those assets at some point in time. So longer term, that shouldn't change the way that you've invested if it's been in good projects, but it's almost like everything's going too well at the moment, isn't it? And something's going to happen, I think, to rock the apple cart. Some of the better projects have done 100x return, as I spoke about. Matt and I got these from when we covered them, or I told you guys I was adding synthetics to my portfolio and that it was one of the best two projects back at EdCon. And Matt covered Aave when they had been rebranding to Lens, and more importantly, redid their tokenomics, which is probably the thing that revamped tokenomics, which is the most bullish catalyst at the moment. So Kyber did that as well, revamped tokenomics. I've got a feeling Raiden are going to do that from some whispers I've heard. Mainframe, the other one I've spoken about lately, are doing that. So they're the things where the market is looking for things like staking and yield and DeFi and just giving the token more value, because a lot of people didn't think about that when they rushed out their project, or we just didn't really have these models back in the day, and now we're starting to know what gives tokens more value, I guess. Synthetics, I spoke about how people do the wrong thing at the wrong time in this video last week, where I said that I think DeFi is getting bubbly and make sure you're taking some profits. And we did see a big pullback in a lot of those coins. The rotation into Ethereum, because a lot of the DeFi coins are paired with Ethereum when we look at things like Uniswap or the 1 inch. And that's different to back in the altcoin cycle of 2017 when all the exchanges were paired against Bitcoin. And then Binance came along and started pairing it against BNB, and BNB has more value. So now basically everything in DeFi is paired with ETH, and that's going to give ETH more value. Wi-Fi did 1,000x return. Now, some people didn't agree with me that this counts as 1,000x. So the story goes that on CoinGecko, which is a coin market cap alternative where you can see all the coins listed and where they trade by clicking on the markets tab, this first price it had was $34, and then 7 days later it hit $4,500. So that was over 100-fold return in 7 days. But Andre, the creator, people are calling him the Satoshi of DeFi because he didn't mine any coins and he didn't even keep any for himself. He released this to the public and said it doesn't have any value. It's a token that does this, this, and this. And people were able to start mining it, and people listed on Uniswap. Anyone can create these liquidity pairs and put tokens into these dexes to trade. And the first price that it traded at was actually $3. And some people have said, oh, well, that was only 5 trades and it was only, I think, maybe a couple $100, something like that. So it doesn't count. Well, I'm sorry, guys. If I bought $100 of tokens for $3 and I was one of those 5 people, and now I've got $130,000, $130,000, yeah, 1,000x return. That's still 1,000x. You can't say it's not 1,000x. The token didn't do 1,000x because it was only 5 people or whatever. So to me, 1,000x in 7 days. I actually think this project is really cool and really valuable, and I'd probably be more likely to invest in it if it hadn't done 1,000x. But look, even the market cap, I still don't think is that high. But anyway, one I want to do more research on and get someone who knows this project really well on the show to talk soon. Now, this promoted tweet has been doing the rounds. The report from Zeus Capital. So I do think that this was mainly FUD. And you guys know that I've been pretty critical of Link. But I do think that these guys have got a big short position on that's underwater. Now, Link's had a pullback, so maybe they're in profit now. But you don't just run promoted tweets and smear a project and do a big report for no reason from a company that hasn't really been around. And yeah, there's something super fishy going on there. All right, so now I want to talk about fees. And Ethereum's super expensive at the moment, and Bitcoin's also fairly expensive. So here we can see the average transactions, change in average transaction, and there's just way more, 600% growth on Ethereum over Bitcoin. Now that tells you a lot in itself, and I do think that Bitcoin has almost shot itself in the foot a little bit in terms of the maximalist mindset. To me, the maximalist mindset is almost like the banks saying, we've got the best system, we're going to protect that at all costs. Anyone talking about anything else is just, it's bad, it's a scam, it's this, that, or the other. Whereas I think the actual thesis behind Bitcoin and cryptocurrencies is openness, free markets, may the best solution win. I don't know, do you guys agree with that? Because I know there's maximalists that watch the channel. Hopefully most of you are open-minded and multi-coiners, with the majority of your weightings in Bitcoin and Ethereum, depending on your risk to reward. But if Bitcoin don't stay nimble and keep innovating, then just look at the innovation that is happening elsewhere. That's all I'll say for now. Now, a lot of these scams are taking up a lot of the block space on Ethereum, which is frustrating, but it's an open protocol. There's not much we can do about it. But average transaction fees are starting to get pretty high at the moment. This, if you haven't been to ethgasstation.info before, you can have a play around with it, and it will tell you the average fees that you should pay for a fast transaction, a slow transaction when you set your own gas prices in Gwei there. So at the moment, we're up around 100 Gwei, which is super expensive. I mean, normally it sits around 10 or 20 ideally. Anyway, I hope that does come down. The miners have increased the block space again recently, but we need scaling solutions. So what are they? Raiden's one I've been talking about a lot at the moment. It's had a bit of a pullback like all the coins, but again, ask yourself, have the fundamentals changed? Look at the on-chain data. This is a good tweet this morning by Sentiment, basically saying about all the active addresses and the price divergence, and those sort of things are heading in the right direction, and that's when it might present an opportunity when there's a difference there. XDAI, so Stake, the Stake token, they're another team that have entered the Reddit scaling competition. So Reddit went out to all the Ethereum teams and said, you guys will show us who can run our new token system we want to run on your scaling solution. So we've got a lot of the teams entered. Raiden have entered it. This is XDAI. These guys have entered it. This is what it just looks like. Their portal, how they're going. So they've exceeded their own expectations, which is, it's just fantastic to see all this stuff that's now ready and being used. So for those that don't know, Raiden is like the Lightning Network for Ethereum, but you can actually do a lot more. So by recording the state, you can do a lot more than just what the Lightning Network can do. And I think these guys are looking to possibly rejig their tokenomics. They've been really quiet on marketing, which I actually love. And I think they're going to start doing more marketing or promoting their technology now it's ready to be used. StarkDex is another really cool one. So this is an exchange that's built with the help of StarkDex or their technology, Diversify. So basically, these dexes that a lot of the trading's happening at the moment, like Uniswap, they're all going to integrate scaling solutions in the next 6 to 12 months. So this is 9,000 transactions per second, really low fees. This has got a professional sort of feel interface. It looks a lot like Bitfinex for those of you that have used it, but this is just what's going to become the norm. So Synthetics have they've recently run again, they use a different technology, optimistic roll-ups. So they've run their experiment as well. They're trading, competition, and they were doing, I think, thousands of transactions a second. So all these DEXs at the moment, which can be super expensive, because say I'm going to buy $1,000 of a coin, we can get a bit of slippage. So that's not too bad there. But if I go to buy, $10,000 of a coin, they're not that liquid yet. They haven't got a lot of depth to their order books. So even that's not too bad, 5% slippage over that big of an order for a reasonably low cap altcoin. And it tells you here the different places that have it. And every day we're getting more and more liquidity on these. So you don't have to sign up. You don't have to wait to get verified. The apps, mobile apps, everything is just getting easier and easier to use in the world of DeFi and DEXs versus normal exchanges. So please learn how to use MetaMask. We've got tutorials over on our website if you haven't been there, guys, and have a play around with all this stuff because it is the future. Loopring Pay, you've heard me talking about them. They've got instant and free transactions using their ZK technology as well, ZK Rollup. So these are all the different flavors. You've got your RAID and state channels. You've got side chains. You've got Plasma like Amisa Go. Matic are using Plasma and Proof of Stake. Optimistic rollups like Synthetics. Validium, I don't know a team that's using that off the top of my head. Is that Fuel Labs? Someone fill me in the comments. And ZK Rollup, Loopring, like we just touched on. So these are just some of the things that are out there and being used. Amisa Go, partner with Bitfinex. We should already, in the next few weeks, pressure all the exchanges to move onto Amisa Go for all Tether and stablecoin transactions, and that would free up the Ethereum blockchain. So that's why I'm kind of saying, don't worry too much. I know it sucks short term, but these things are all going to be solved, and hopefully soon, because if Bitfinex can do this on the first day that Amisa Go or OMG network launched, all the other exchanges should do this as well. Fuel Labs is another one that's been killing it lately. Diversify, Layer 2, so we've got Privacy and ZK Starks. So you've got ZK Snarks, all these different mouthfuls, and they're just the different teams that are playing around with this technology because A, this technique makes things private, but B, it scales into the thousands of transactions per second instead of the 10 we can fit in at the moment. Gods Unchained, they made their own scaling solution very early on. So those of you that have played the cards, they've been fully scaled for a little while now. And look how cool and clean these card games are. And I'm going to do a lot more on gaming going forward. Members know that I already own 5 gaming projects now, and I think that's a sector that's going to really grow. Ernst & Young have built out their suite of tools for the professional, the enterprise, the corporate world. Again, making Ethereum private so people can have these documents on there from their business. We've got the same happening with Baseline Protocol. They're working with Consensus to onboard businesses. You've got Chainlink saying, look, partner with us, we'll do the data feeds. The graph is there finding this information. So all these different Lego pieces, as we call them, are coming together. And people just sometimes forget that Microsoft themselves have put out this suite of tools saying, come and build on Ethereum. We'll make it nice and easy for you. So this is all happening already, guys. Just don't worry and think that it's dead. Now, the final thing I want to mention behind all that is that scarcity is the most important thing as long as governments keep printing trillions of dollars. And this is the stock to flow model you've seen with Bitcoin that I modeled for Ethereum. Now, at the moment, Ethereum's stock to flow isn't that impressive. It's around 28. So it's sitting around here somewhere. But when we move to proof of stake and everyone's locking up their coins, we've seen maybe 80% of people do that with Tezos. Now, I think it might be around 40 to 50% for Ethereum 2.0. And the other 40% is going to be locked up in, let's say, DeFi, or there might be 10% over in insurance, in different contracts, gaming, these different companies that need to keep some ETH to stake. Everyone is going to want to run their own node, all these businesses, Microsofts of the world. So I see a lot of ETH being locked up. I see it being very scarce. And if a lot of these things play out, these are very sort of mid-range assumptions that I made. And I said assumes majority stake, but that was before I took into account for these other things where we get ETH locked up, like DeFi. So I think it's fairly fair to say that we can assume that the stock to flow is around 58 by the point this gets fully rolled out, which is the black dot here. And if we say that, well, what does that actually give us, the power regression or the trend line of what a market cap could be? We're getting up there towards the $1 trillion market cap for ETH, which is obviously a lot higher than the price we are now. What's market cap at the moment? I think it's around 50 billion. So let's say double it, $500, 100 billion times 10, so $5,000 ETH. Now that's all things remaining equal. That's obviously not going to happen. There's always things that come up or whatever, but hopefully you guys get the picture. If we want to look at how scarce ETH is, when we start to talk about burning of all the fees, all these things added together are going to make ETH scarce. It's going to have a lower inflation than even Bitcoin for at least the next 4 years anyway. So yeah, validator, multi-client testnet, that's all been out. We'll cover that in more detail in the monthly Ethereum update with Anthony soon. Looking at price, yeah, I mean, I'm still fairly bullish here. I think that the sentiment is that a lot of the big accounts missed this run. A lot of people, just like people were bearish near the bottom, a lot of people are sort of saying, well, this can't be real. And if you go back and you look at what were they saying, when it gets through 10.5, that's when I'll be bullish. And we sort of get through 10.5. Now, if you want to wait for the weekly candle to close, that's fair enough. But the reason that people are saying, it hasn't had enough of a pullback yet, it always has a big pullback. These are maybes where I'd rather have a ticket on the train. I'd rather have a seat and have some Bitcoin. And if you're new, buy a chunk and then keep dollar cost averaging in. Buy a little bit each week. So if we do have a big pullback, you get to average your price down. And we're not to the point yet, I don't think, where we've gone completely parabolic. The chart doesn't look like this, where we were telling people to sell and telling noobs not to buy. I really think there's a good mix of sentiment where there's a lot of traders are still bearish and unsure. The mainstream hasn't really got on board yet. My inbox, a couple of messages from friends the other day when there was a bit of excitement, but it's not like it was when, you're just getting bombarded with people every day. That's more what's happening in the DeFi space that really worries me. People saying, I'm just going to buy all these DeFi coins that have gone up 100x or 1000x. Someone literally commented today on that post I did about Wi-Fi saying, where can I buy this? And that's the mindset of a beginner. Oh, that thing's gone up 1,000-fold. I want to buy it. You should be selling it. You've got to think about who's on the other side of the screen. So last thing I'll just mention is, yes, gold and silver, after reaching this all-time high, similar to Bitcoin, where you can argue it hasn't had a lot of a pullback. We did have a pretty nice pullback there. What was that percentage-wise? 15%. In terms of the money that's coming flooding in, silver's just such a tiny market cap. I think anything below $20 was a steal. But if you look at the all-time high of $50, then it's just, I hesitate to tell someone it's okay to buy a chart that looks like this. But in the scheme of things, when you look at the market cap in the billions and the trillions of dollars, where I think silver's going to play catch up in terms of the sentiment and all those things coming together, guys. So stock markets, I think they're going to go higher because they've been flooded with money. The Venezuelan stock market keeps going higher as well. It's the currency that is becoming more worthless. That's what you've got to start thinking about stocks in. Gold, silver, Bitcoin. A $100,000 Bitcoin might mean that the dollar's lost a lot of value, but the euro's lost more. The Aussie dollar's lost even more, but the Aussie dollar might be up against the US dollar. So it's always relative to the total amount of money that's being printed. And that's where, for the first time ever, we've got a digital, Bitcoin, but also this sort of techie asset, Ethereum. It's got so many macro drivers behind it, investment thesis that you can make. So I've just got $100 donation, Izzy Crisipa. That is awesome. Thank you so much for that. Keep up the excellent work. You're a legend, mate. Let us know if you've got a question for that donation. And Cartier Chain was the one that we were going to look up. And then we're going to look at a couple of currencies for the first donor as well. And if you've got any questions, guys, I might try and have a look, but we will obviously prioritize the guys that have given us a bit of a donation. In terms of the currencies, I think you wanted the Iraqi dinar. So this looks like one that is pegged. I don't know a lot about this off the top of my head, guys, but when you see how it's sort of banging up against this wall, that tells me that this is a currency that's pegged or defending its peg to some degree. You see, not a lot's changed there since 2009. So I think this is kind of... It's funny how a chart can tell you a story. Looking at this chart and knowing the relationship between the US and Iraq, I would start to picture in that they've got some sort of deal about the currency and oil. That all ties in together. Let's not go down that rabbit hole, but I would say that it's not going anywhere anytime soon. I don't think they're just going to let it just rip higher. They actually want to try and defend it a little bit here. And I think they've got a decent holding of US Treasury bonds as well. Depends how the relationships and what's going on in the Middle East, really, to how that currency plays out. Good question. And what was the other currency you asked me about? Was it the Indonesian? It was, wasn't it? Rupee. Was it the rupiah or the rupee? This one's more interesting. This has got a pretty clear uptrend over the long time frame. So the US dollar, I'd say, is going to continue to get stronger. And that's why, again, that case I made before, the US dollar is going to keep getting stronger against all these just nothing currencies around the world. It might have a bit of ebb and flow with the euro and some of the bigger ones. But against these other smaller currencies, US dollar is going to keep getting stronger. Cartier Chain, hybrid blockchain, solution infrastructure, enterprise governments. So my question for these are, like we just looked at, how are these sort of chains? What does the token offer in terms of the value? Who's their end customer? How does the token tie into all that? And how are they going to compete with Microsoft and Ernst & Young, Ethereum Enterprise Alliance that have got that sort of head start? So if they're targeting a specific region like Vietnam, and they've already got some partnerships there and they're solving a problem, then they're the sort of reasons where you can catch on and go from there rather than try and being the Ethereum killer. We're better at Ethereum and everything. I don't think that is the way to win. It's being specific. So I hope that helps. The Neo partnership, you've just mentioned in regard to this one as well. But what I actually like from that news announcement the other day was the Blockchain Services Network, BSN, that partnered. China's looking to partner with 100 blockchains, they said. So not just the 6 they announced the other day, 100 blockchains. Now, Neo was probably one that surprised me. It hasn't really moved that much. And when you consider it's still down 90% from the $220 all-time high, I would have thought that on that China news, this one would have, gone back to $15, $16. And you say, again, people are not good at math. Beginners go, oh, I don't really care about that. It's $11. What's a coin that's 1 cent? Whereas as a trader, I'm thinking, you know what? This is a good risk-reward play for me, because if it goes there, that's a 60, 70% move. Or sorry, 50, let's call it 40 or 50%. But put a bit of leverage on that as well, and you're starting to get some big percentage moves just by playing catch-up. And that's nothing too out of the ordinary. It's still down 90%, even if it gets to this level. So that's the way I think about percentage terms. Awesome, guys. Well, we have been running just about an hour. That has been fantastic. I hope you guys have enjoyed that and got plenty of value from it. I'll go back down to the live comments. Any thoughts on Ampleforth? Yeah, I don't like it from what I've seen, to be perfectly honest with you. Ampleforth is trying to peg itself at $1 with this mechanism that rebalances. If it's within, if it's out of the, is it 5 to 10% range, it tries to come back towards $1. It is, instead of changing or letting the price stay the same, it sort of experiments with letting the market cap, more money goes into it, so the market cap can get bigger, and then it has the sort of an algorithm to gradually change the price, and it by pulling tokens out of circulation, basically it's almost like instead of just saying let's peg it at $1, there's heaps of stable coins out there. They're trying to go about it in a really complicated manner, and they're saying, well, it's good for debt long term, but if you denominated your debt in something that was worth $1 and then it's worth $3 or $4, that's completely hasn't done its job. And I could have just done it in Tether or DAI at $1. So I just don't really understand the market product fit here, or what problem they're trying to solve. It's a cool experiment. Maybe there's something I'm missing in the debt markets that they're talking about. But even that, is someone going to denominate their debt for 10 or 30 years in an experimental cryptocurrency that's been wildly volatile? Like, I just don't see what they're solving here. But if someone wants the team to come on and tell me why I'm wrong, you guys know I'm always open-minded. Have I heard of the rumors of Engine Wallet integrating with PlayStation 5 console? Engine have already partnered with a few really big players in the gaming space, so it wouldn't surprise me. Telling people to watch out for scams. They're all around, gold scams as well as crypto scams. If anything tells you that you can make money regularly, or if your friends are trying to get you to sign up, those sort of red flags, watch the video that I made about scams. It's on our website. Thank you, guys. I think that's been awesome. Smash that like button if you can. Thanks to all our members. Guys, if you're interested, head over to nuggetsnews.com.au, join the group, take a sneak peek at our new platform and another big announcement we had last night. And I did also let members know another a coin I had added in the weighting to my portfolio today. So if you're joining the group, read the rules, click the Nugget tab to read my posts, read the member directory. If you're a beginner, make the most of all the modules over on our website. But I'll talk to you guys again soon. Cheers.